So if you are thinking about buying Amazon stock, watch this video real quick before you do. I'm Lando Success. Let's do some quick housekeeping. Hit that like button, hit that subscribe button to help out the YouTube algorithm, and also hit that bell notification so you can know when I'm releasing new videos. And this video is inspired by Seeking Alpha, where you can get up to $40 off if you are interested in taking your investment game plan to the next level. Check that out, link in the bio, or I will have it pinged to the top of the comments. So this article is written by Maurer. I believe that's how you say his name. It's a Amazon selling into strength. So let's go right into it and read what's going on. A couple weeks ago, I detailed how shares of internet retail giant Amazon were looking to find a bottom. The stock since then has fallen more than 40% in the last 2 months to the lowest point since the pandemic started, as weak Q1 earning reports combined with investors shunning growth factors. Now that one of my catalysts for a rebound is behind us, it's time to look at the name again, as recent rallies give me a bit of a pause. While the US market fell a bit on Friday, the Nasdaq is still about 1,000 points above its recent low. Amazon shares was not able to break below the $2,000 level, but they balanced more than 20% from their 52-week low. On Monday, shares started trading at more of a normal price thanks to the 20-to-1 stock split I mentioned in my previous article. However, there are a few other issues Amazon have to deal with currently. First is that the Federal Reserve is starting its quantum tightening program this month, reversing its recent easy money policies of the last few years. The US market soared when the economy was getting a lot of stimulus and money was being printed faster than you can blink. But now the process is going in reverse. Next week, the Fed meeting again, and investors are expecting another rate hike. With inflation still being a significant problem, a hawkish tone from the central bank would certainly hit growth names like Amazon. The bigger item, in my opinion, through the continued rise of energy prices, current gasoline futures indicate that we're only about 2 weeks away from seeing the US price above $5 a gallon, which is crazy. Soaring energy costs are a twofold problem for Amazon. First, Amazon will face higher transportation costs as it delivers all those packages, which will hurt margins. You got to think, when people do Amazon Flex, they're driving Amazon cars, they're getting these vehicles everywhere. Gas prices, I told people when it first happened, it impacts the whole world on all different scales. People just don't understand it. Most importantly though, it means that the consumer spending habits will have to change, and it's likely that discretionary purchases will likely see some cuts. This is even more important to the company when you consider that its annual Prime Day event was moved back to Q3. I bring these items up because my previous article, you guys can check out his previous article, with Amazon providing weak guidance a lot lately. I'm not sure about rising analysis estimates are the good thing here. Don't forget that due to Prime Day shift, analysts are calling for a significant revenue growth acceleration from 6% in the current June quarter to more than 17% in Q3. The final issue I have for the stock currently is that it's quickly approaching the 50-day moving average. In the chart below, you can see this declining trend line could be met in the coming weeks, and this likely will be a line of resistance as it continues to move lower. It will take a bit of time for a key technical line to level out and head higher again, given the stock's downward movement towards the recent months. So you see the line, they basically saying them averages is completely going down. And at the end, he said Amazon shares has rallied nicely in recent weeks, but perhaps it's time for investors to sell into strengths here. The stock split catalyst is now behind us, and the Federal Reserve is starting its quantitative tightening plan. With energy prices continue to soar, consumer spending will be tested, yet streak analysis continue to raise their estimate. With the stock also moving closer to a key technical test, investors might want to take some profits now and take another look at Amazon should we get a recent pullback. So this is what I've been telling people since this Amazon split happened and before. I'm not buying right now. And the reason I'm not buying right now is because all the hype and I don't see any positive greens. Amazon price is overvalued in my opinion. So you look, this is completely amazing, right? And their price went well past 3,000, but right now you can say well past 100 since it looked different. But look at this, in the last year, if you invested in Amazon, you lost money. In the last 2 years, if you invested in Amazon, you have lost money. Year to date, you have lost money. So what I'm doing now, since the stock split literally happened, we'll say on June 6th, it was at 128, and now you see it's going down. My buying price, I believe, is going to go right around $101 to $105. That's when I'm going to buy like crazy. I believe that will be as low. Let me know your thoughts in the comments. Do you believe it's still time to buy right now, or you should wait it out? And do me a favor, hit that like button, hit that subscribe button. And if you want Seeking Alpha, once again, you can get $40 off by clicking the link in the bio. Talk to you guys soon.